President Biden touting today those strong job numbers, which capped off a year of job growth unmatched by recent presidents. He says despite the ongoing pandemic, America is back to work.
Our country is taking everything that COVID has to throw at us, and we've come back stronger. I'm pleased to report this morning, but many of you already know, that America's job machine is going stronger than ever.
All right, joining me now to take a deeper look at today's report, Yahoo finance reporter Alexis Christoforous. So, Alexis, today's report came as a surprise to a lot of people. January was a particularly hard month for a lot of Americans, as you know, who had to miss work due to the Omicron surge. It impacted even us here at ABC News. How did and how didn't the pandemic impact hiring last month?
Well, it impacted all of us here at Yahoo Finance as well. Kira, good to be with you again. Just about everybody I spoke to today was really surprised by the strength of this report. We all thought that Omicron wave was going to sock it to the job market, but instead, the labor force answered back and employers added 467,000 jobs last month. Wall Street was expecting about 150,000 jobs, so a lot more there. We saw 150,000 plus jobs added in hospitality and leisure. So we're talking about bars, restaurants, and hotels. Also retail adding more than 60,000 positions last month. The unemployment rate, by the way, ticked up to 4%. You might think that's bad news, but actually it just means that more people came off the sidelines and actively started looking for work. That hasn't been something we've been seeing a lot of lately. So definitely a positive there. And also wages increased 5.7% from January of this year to January of the prior year. And that's really, Kira, because more and more companies have to pay their workers more to attract people back into the workforce, because we know there are still a lot of people who have yet to return.
So which sectors of the economy saw the biggest job gains?
Yeah, it was those bars, restaurants, the hospitality industry, which you might think would have been really hit hard because of the Omicron wave, with so many of us out sick. So we saw big gains there. Also, transportation added a lot of jobs last month. You know, all those supply chain issues, lots of companies were running out trying to hire truck drivers to move those goods to where they needed to be. Again, retail and professional services, things like bankers and financial services also got a nice bump last month.
And even with today's strong report, though, more than 10 million jobs still remain unfilled. Is there any relief in sight for employers trying to hire here?
Yeah, you know, the labor shortage is real, right? And it's for a number of different reasons. There are some people who just say, I'm not going to enter the workforce until I find the right job with the right pay and the flexibility that I want. The pandemic also forced a lot of baby boomers to retire early. But something we don't talk a lot about, and I think is being underreported, is people suffering with long COVID and why they're not coming back into the workforce. These are people who have had COVID-19 and are having long-term symptoms, health problems related to it. Last I saw, something like 1.6 million workers could be missing from the labor market right now because of long COVID, Kira, and that would account for about 15% of those 10 million job openings you just talked about.
So then if this was such a blowout report that we saw today, why isn't Wall Street celebrating more?
I know, I was scratching my head about that this morning. Just recently, the market got its legs under it a little bit more, and now the Dow and the S&P and NASDAQ are all higher. You know, what this report did today was it gives the Federal Reserve ammunition to raise interest rates, perhaps even more aggressively. They've basically telegraphed they're going to start raising rates for the first time in 3 years in March. And now the fear is that they could get more aggressive with it later in the year because they feel the economy is strong enough and can take those higher interest rates. And of course, the Fed feels it needs to raise rates because it's trying to combat the highest inflation we've seen in 40 years.
Before we let you go, this disparity between supply and demand has driven up a lot of prices. We've seen them, but we're really seeing it in the oil sector this week, with oil topping 90 bucks a barrel. What does it mean for inflation?
In short, it doesn't mean anything good. You know, we've got now crude oil above $92 a barrel. A lot of the analysts I'm talking to say we could see $100 a barrel oil soon, especially if that conflict gets worse there between Russia and Ukraine. We've also have the winter storms. The report just before me was talking about that. That's pushing oil prices higher, and higher oil prices are very inflationary. So it looks as though we're going to be having to deal with these higher prices at the gas pump. It's going to cost us more to heat our homes, at least in the short term, until those prices start to stabilize. Kira?
All right, still a bit of a rough road ahead. Alexis Christoforous, thank you so much. Have a great weekend.
You too.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.